Good morning, it's Stock Guy 22. Wanted to review some of the charts from yesterday, how the markets closed, and to review this morning before the market opens. It's just getting into 9 o'clock, and some nice patterns had formed. Looks like they might be broken a bit this morning, but I wanted you to see some of the things that I was looking at yesterday. So as you can see here, this is the Dow chart. As you can see, a nice hammer candle formed. Similar type pattern to what we did into April. Let me just show you that. I'm just going to take a screenshot of this chart. Okay, so as you can see here, this pattern that we did, that was just going into the beginning of April. As you can see, we had dropped for 2, 4, 5 days straight, then we double bottom and came up. Yesterday, we actually liked the pattern in the group because we saw a lot of recovery from the lows. Okay, so a hammer candle formed. Now, when these hammer candles form, that's usually a good signal. As you can see, we had 3, 4, 5 days down as well. So we actually didn't close in the green. We actually still closed down for the day, but well off the lows. So today, it looks like the futures are down. Okay, so we still got all that pending news about Greece. So that's still putting pressure on the markets, and until that's out of the way. If it gets held up, it might go into June, they said, for another election. And I was reading the other day that there's like a 75% chance that Greece might be out of the Eurozone. So they might be packing up their U-Haul and moving out of the Eurozone. So let me just review this other chart here. This is the morning futures. And as you can see, this is where we were last night into 4 o'clock, 4:30. We sold off through the whole night. As you can see, okay, into the morning we did bounce up a bit, but still way down. Now what we wanted to see is if we can hold below above yesterday's lows. Okay, so let's go back to the other chart. So if we can still stay above that 12.8, okay, on the Dow. So let me just do it on this chart. We can still stay above this point. That's actually not bad, and maybe we can do another bounce into the afternoon. If that happened, we'd get nice tweezer bottoms forming, sort of like here. It'd be a lot bigger than these, but this is what we want, and that's usually a recovery signal. Okay, and I thought we could be on track to do multi-day move to the upside. Okay, that would take us up towards 13, and then 13.3, as you saw that last video, we were right coming into resistance. Okay, we had popped through, but then sold off again. Okay, the other concern I had was if we did fall back under that 12.8, the next level is actually not that far down. It's another 100 points in the market, so about 12.7. Below that level is really where I'd be a little bit more concerned. Okay, because you can see on this chart, there's not a lot of support to the downside. Okay, 200 days around 12,180. Okay, so anything under that 1270, 12,700, you should be bearish. Okay, or just be careful with your buys. Don't buy too soon or scale in. I started to scale in some positions yesterday. We did get bullish on Apple. Let me show you the Apple chart. Same thing, a little hammer candle formed, coming well off the lows. Although this morning in pre-market, Apple is 562.75, so it's actually down a bit from where we closed at yesterday. Here's the pre-market action, just so you can see what I'm looking at. Okay, so as you can see, we drop back. We are basing still above that 562 area. Okay, we'd want to see us back up over 565, 568. Okay, Caterpillar is one that I added to yesterday, and I'll show you the daily chart on that as well. Nice hammer candle formed here as well. Okay, so that's usually a good signal, but whenever you have news, you risk that these type of patterns fail. That's why you have to wait for the next day. If today we were over 97 on Caterpillar, that would be a nice buy signal because it can go to 104, 107 again. I'd bought it just over 100. I missed selling it into 109 because the last few times I've bought it, I sold it a bit too soon. So I only had a third of a position. So what I did was I was waiting to see if 110 broke through. I should have really sold because, as you can see here, nice resistance into this 50-day moving average. Okay, that's the pink line that you see there. Okay, I should have even sold as we were dropping back. Once the earnings came out and it dropped back a little bit further there, under 105, I thought, okay, I'll wait. If it gets towards 100 or the 200-day, I'll buy again. or add to it. So I added yesterday. So we'll see how it goes this morning on it. Here's the pre-market action. It's just under 95. Okay. If it ends up coming back up over 95, 96, I'd actually maybe add one more batch to it and just give me a little bit oversized, okay, on it, like a little bit bigger than I usually am. Okay, so here's the SPY chart. Very similar daily chart. As you can see, a nice hammer candle formed. We went slightly below the April lows yesterday. Okay, let me take a screenshot of that. But again, a similar hammer candle, okay, that formed. Okay, so slightly below the April levels. If we had gone further down, I'd be looking at here, closer to 134. Okay, but you can see if we do bounce, 138 to 140 range. Excuse me. Okay, pretty easy charts to read right now. We are range bound, as you can see. Okay, so between that 142 and 130s area. Okay, so I'd like to see a multi-day move up, but you know, news is always gonna trump the charts. So, but these are a type of patterns that I actually like to look at. I'll show you how many charts actually did. I posted on Twitter yesterday how many charts I was seeing that were having a hammer candles. So you can see it on Apple, Amazon. Okay, so these are these hammer candles. They just look like a big hammer. Okay, and what that tells you is that there's buyers bending it up into the close. Okay, and it's moving up. It's well off the lows that it was at the earlier in the day. Okay, that's really what those are. Okay, again, you can see it on gold as well, that it came off the lows slightly. Okay, so a lot of hammers. Okay, from the SPY all the way to the markets themselves. Okay, GLD. This is just one that we were looking at yesterday. Okay, so you can see a lot of charts, hammers. Even like Netflix did a little hammer candle off that low 70s area. Major drop, but I wanted to share that with you guys. Okay, you can see the Qs as well. Similar candle. Okay, so today, if we actually did fall back and then get like some type of tweezer action forming and have a strong close, that would be another good signal to buy into the end of the week and into next week. Okay, a little bit risky holding over the weekend, but these are the type of patterns that you wait for after big drops to get that little push up. Okay, so a little bit risky, but easy to set stops. Okay, so I thought I'd share that with you to show you those patterns that were formed. Okay, so again, you can see it on there's the Nasdaq 100. So these type of hammers I was seeing right across the board yesterday on many positions and the markets as well. So I hope this is helpful, guys. One more thing, let me just review the oil chart really quick. Okay, I'm just going to make this bigger on my other screen. I have 4 different screens laid out, and I can actually just take screenshots via the different screens. Okay, as you can see, oil dropped back a little bit in pre-market here. Here's a nice little daily chart on it. Okay, so it is on a downtrend, as you can see here this morning. 95 is really a pretty good area to watch for. And let me just show you on here on the daily chart. Oops. Right here. We had held right around that VWAP and the 200-day. Okay, and I knew 95 was going to be a pretty good area. I didn't want to trade oil in between this 100, 105 because it could have gone either way. There was the Iran situation there. It was on an uptrend. I was short on it, so I missed this whole move down. I did close it out as we got close to 100. I was short from there, but I didn't play it into this little zone lately. Okay, I was staying out of it. Now that it got towards 95, I was thinking of play for a bounce. I missed a nice bounce yesterday, where we bounced from the low 95s up to 97. It also had done a nice little hammer candle, as you can see. Some tweezer action. Okay, all into this zone here. And if today, if it held over that 95, 96 area, I'd actually go bullish with it using UC. You can go UCO or USO. Okay, some guys in our chat are using USO options to go long. And another technique that one guy in our group was doing on these big drops on oil is to short the calls on SCO. Okay, and that seems to work quite well too. But you can see, even if we did drop back, we're going to have support around that 92, 93 area. Let me take a quick screenshot there to show you. So if you do trade oil, this is the crude chart. Some of you guys look at the oil futures. Very similar. Okay, so we'd want to see towards this 93. This is why I said around 95 I'd be interested in it again. And you see the upside's quite nice. Okay, so nice risk to reward. Even if it did fall back, I'd be willing to buy further down. Now we could get down towards 90 or even 85 again. That would bring us way back to last year's lows, where we were having some nice support before the big bounce. But I feel pretty comfortable right around here, especially since the drop was so big. And especially if you want the economy to start recovering, oil is going to go up, whether we like it or not. Okay, nice to see that we're saving at the pumps the last few weeks. But in terms of oil, I love to trade it after big moves like this. So after big spikes up or big spikes down, I have a lot of great success with UCO, SCO. So I thought I'd share that, what some of my strategies are on some of these things. And again, if you want to see my live trades, feel free to join our chat, or to just join our free site on our site, where you can get some videos that I post up as well. So I'll show you where the site is. So if you just go to, you can follow me here on Twitter. Oh, there it is. That's fine. So if you just go to stockguy22.com, and you can just fill out a free membership, okay, which is, I'll show you what you'll see. You can just fill out this. You'll get some videos like this every time we post them up. We'll start sending you guys emails about it. Okay. So if you just go members.stockguy22.com, and you just sign up for a free membership. It doesn't cost anything, but you'll get updated on videos like this and webinars that we have. Okay. So I hope you enjoyed this little quick video, and talk to you soon.